Everybody, welcome back to the channel. I hope you're doing fantastically well. So as we know, prop firm challenges are still massively popular out there and everybody wants to take on these, get funded and get some mega payouts. Now the reality is the majority of people who take on a prop firm challenge actually fail them, not just once, but multiple times. And the statistics are not in the favour of traders. But that's not just specific to prop firms, that's actually trading overall in general. When we look at a majority of brokers, the statistics there are that 80% of people actually never make money and the majority actually lose all their money putting it into broker accounts. So why do people fail prop firm challenges? I think we've broken down into several sections, which I'll go through here, but at the end I'll give you a summary and some tips of what to do if you want the best chance of success to pass a prop firm challenge. So the first thing is inexperienced traders. They generally get caught up, whether it's Instagram ads, Facebook posts, etc., of people doing prop firm challenges thinking they can do exactly the same with little or no experience of trading. Now, if you've been in trading for a long time, you know that it takes many months or even years to get consistent and profitable. Now, these people go on and take a prop firm challenge, they haven't got any clear strategies, they're looking to possibly buy in signals from elsewhere who don't fully trust, and they haven't got the skills around risk management, psychology to how to get out of some negative situations. So if you are looking to do this, make sure you've got the basic skills of how to trade, understanding risk, lot sizes, platforms, how the brokers all work. All those things are the experience of trading, as well as having a clear set of defined rules of actually how you're going to trade and a plan of attack to go through and pass each of the phases. So carrying on from that one is probably unrealistic expectations. Again, we're all bought into this whole influencer side of things where people are saying they can pass their challenges in 1 day, 2 days, which is fantastic, great if you can. But the reality is people do that to get clicks and views. They could actually have 2 separate accounts, hedging one against the other. One passes very easily, the other one blows up straight away. Now, when you go back several years, a lot of the companies actually had time limits involved. We had 30 days to pass phase 1, 60 days for phase 2. Now, with it being unlimited, you can take your time. It's not an ego trip. It's not a case of going on and trying to pass this as short a time as possible. It's passing it with the most consistent trading possible so you can maintain this for the long term and not just a 1-2 days boom and then bust straight away when you get funded. Now, ultimately, the real reason why people fail challenges is for breaking the rules. Now, we know the majority of these have a set limit on daily drawdown or maximum drawdown, and people don't even go and read the actual rules themselves. They just think they can go and trade, get past. If you take some of the challenges that have a 5% daily drawdown, people are getting into that 4, 4.5, 4.8, 4.9% daily drawdown and thinking, how can I turn this around and make it profitable? And then going with one big Hail Mary trade and lose the entire lot. Now, reality is if you have a good, solid, structured trading plan, you'll know if you go 1, 2, 3% down on a particular day, you need to stop, assess. And the reality is that when you are able to do that, you can come back the following day with a much fresher, clearer view and go on and make the actual profit you need to get either out of that drawdown or go on and make a profit. And it's not just the daily drawdown rules, it's rules in general. It's like news trading or strategy types you're able to use. High frequency trading is the one that's banned by most of the prop firms, and a lot of them are now introducing news trading where you can't trade a certain period before or after a major news event. So we look at non-farm payrolls or CPI data. Those are the big ones that people want to trade around. The reality is, we know with gapping, slippage, all those things, you're very easily able to lose a lot of money as well as make money. But the reality is, if you're looking to become successful, you're looking to protect your capital at all times and not go into big risky trades and get big slippage or gaps on any of these news announcements. We can now look at psychological factors. There is obviously a big fear involved with this. Yes, there's a capital output to buy a challenge, and being invested in that one, not just financially, but also emotionally, people do not want to lose. And therefore there's a fear involved of placing the wrong trade and therefore going into a drawdown. Now, this whole thing really ties into people's psychology of fear of missing out, then also the greed side of things, and also then the losses as well. Being able to maintain and manage your own emotions through trading is one of the hardest things to do, and also that's one of the things that people don't work on at all. It's one of the things that if you are a successful trader, you've probably put more time into your own psychology and your emotions than any of your other trading setups. That psychology then leads into being impatient, rushing things. Then you get into revenge trading. You get into the whole fear of failure. What must I do to get through this one? You then have potentially, if you told people you were going to become a prop trader, you've got that pressure of success and succeeding and not wanting to let anybody down. And therefore you go and make mistakes and make it a lot worse. But probably the biggest reason why the majority of traders fade is around poor risk management. Now, when I say risk management, a lot of people, they just think, oh, it's how much I'm risking per trade. It's also not per trade, it's looking at assets, looking at volatility of things, obviously looking at how much you're risking per day overall. Now, when you start looking at successful traders, they are typically going to be risking 0.5 to 1% maximum per trade. The inexperienced people come out and start risking 2, 3, 4, sometimes even 5% per trade, wanting that to actually go in their favor. And reality is when it actually goes against them, that's when they start losing out. You then also factor in other risk factors by going in too large a lot size. You then end up getting slippage, not being able to get out of the trade when you want to, and therefore that then causes bigger losses overall. Then you'll have the traders who do not believe in stop losses. They will literally go out there, place a buy or a sell trade at market execution, large lot sizes, and eventually doesn't go in their favor and then get caught out by having to either close it out manually for a bigger loss, or if the market gaps or the big news announcements, they can get spiked out very quickly and lose a lot of money on those trades. Now, you don't always have to have a stop loss in place, but you obviously need to be able to manage that. Some people want to hedge against it. They'll have a opposite buy order or sell order, depending on what direction they're going, as well as having some EAs on the charts where they can actually have their own risk management in place and therefore close out trades if you get to a certain level. But none of these things are 100%. You want to make sure that the risk management strategy you're doing is fully robust and tested and tried out for a long period of time. Not just saying I've made 1% on this first trade, I can now go and risk 3% on the next trade. Ultimately, when you have a winning trade, you want to be more cautious and not go in all guns blazing on the next one. Just be more realistic that statistically, you're not going to get 100% of winners all the time. So if you had one good trade or two good trades, the next one potentially could be a bad one. So how to avoid failing a prop firm challenge? Follow these steps and you might have a much better success rate. Now the first one is treat it as if it's your own live account and your own money and not as a game. Respect it and make sure that every trade is carefully calculated and you are placing it with a valid reason. Focus on your risk management and your risk control over fast profits. Do not go and risk 3-4% on a single trade. Make sure you're looking at starting off maybe at 0.25%, 0.5%, and scaling up from there until you're comfortable at 1%. Again, never risk more than 1% on any one particular trade, because especially when you have daily drawdown rules, you can very quickly get to those after 2 or 3 successful losses. Have a very clear strategy and plan. Now this is very important, anything in trading. Have a plan, write it down, stick to it every single day. Make sure you're doing the same routines over and over again, which is again defined in your plan. Make sure you're not trying to pass this in one day. Now, if your plan says I'm going to try and achieve 0.5% return per day, then potentially you're looking at almost a month, 20 days worth of trading to get to that first phase passing. But again, if you're consistent, then 0.5% return on the accounts will make a very good return in the end. Practice on demo accounts first. Make sure you fully understand how the platforms work, how you're able to use whether it's MetaTrader or CTrader to place the trades and understand how the actual all the orders work and stop loss management as well. Make sure you fully understand everything about the actual challenges first and don't go in expecting to win straight away. And finally, learn all of the rules inside out, even if you have to write them down and review them on a regular basis. Now, some firms actually change their rules. I've seen a number of them over the period of time come out and subtly change their rules but not announce it massively. Whether that is introducing news trading or some prop firms have actually introduced consistency scores. Make sure you fully understand the rules, even write them down, print them out, stick them on your wall so you can review them every single day. And again, it's not just the overall loss, a maximum loss and daily loss, it's what strategies can be used, how can you trade, what assets you can trade, because some of them will restrict certain ones, maybe not like to trade crypto or other assets. Make sure you know 100% what you're able to trade and how you're able to do that one. And then you'll be in a much better position to pass prop firm challenges. So how you get on with your challenges, let me know in the comments if there's anything I've missed or other particular areas you want me to focus on, and I can do dedicated videos around whether it's risk management or psychology, so we're all in a better position to be able to pass our prop firm challenges and get some great payouts. Thanks for watching everybody, and I'll catch you again very soon. Cheers.